Mr. Loo, Temasek performance last year was only 1.6%. Why don't you just put money in S&P 500 and let's just compound powerfully, right? No need to go through so much effort. Well, ladies and gentlemen, today we would like to review Temasek's performance. Temasek is one of our country's sovereign wealth fund, and it's very important for us to take a look at its performance because a lot of Singapore money, Singaporeans' money and Singapore's money is in it. Let's look at the performance, shall we? So today's video is in response to one of our viewers' question to me. And he rightfully pointed out that Temasek's performance is 1.6%. For benchmark index that commonly used by other people, it's about the S&P 500's 17% growth last year, and says that it's rather lackluster. So I today will attempt to share with you what I think of Temasek's performance versus its objective versus some of its benchmarks. And I think there's a lot of valuable lessons for us today, not just from an investor, but also from a Singaporean to know what is the Temasek all about. Let's go on, shall we? So as usual, these are my disclaimers. Please watch and let's go. So Temasek has just released the news that its total shareholder return for FY 2024 over 12 months was 1.6%. Now, 1.6% is in a backdrop of a phenomenal rise in S&P 500 of about 17%. Long-term return of Temasek over 10 years and 20 years has been steady about 6 to 7%. And some people said, no, 6 to 7% not exciting, Mr. Loo. I want at least 10 to 12, right? Well, let's take a look at whether these kind of returns are decent. Meanwhile, the S&P 500 return over the same period is roughly about 17%. And interestingly, as we shoot the video right now, the S&P 500 just closed and broke through resoundingly 5,600 points today, and right now has hit another all-time high strongly. So that's why I can understand a lot of people just look at Temasek's result versus S&P 500 and just say, cannot be lah, we got to do better than that. But I think it's very important for us to see Temasek in the right light. So before we look at Temasek's result, let's take a look at Temasek strategy and its mandate, shall we? For a small-time investor, we only got one objective: maximize return at the minimum loss or minimum volatility, right? That's very clear. But Temasek is not just about achieving the highest goal possible, but Temasek has multiple mandates and objectives. Number one is that they are, of course, got to make sure that a lot of the investments are done in Singapore and the investment do Singapore good. They also has the objective of making sure that whatever they invest, they are also carrying the Singapore flag. So they build relationship with the fellow countries, businesses, industry, and the government of those countries as well. And also, right, they also have to take care of UABO, these kind of small little, objectives that most of us don't care, like sustainable investing, carbon neutral, and all sorts of stuff. They also need to be a shareholder of last resort. Should some of these strategic key companies go down, they must be there to bail them out. So they have a lot of objective. And also one important thing is that they are sovereign wealth fund. They cannot be like like S&P fund have huge volatility. They have to be a bit more mellowed in controlling the fluctuations, so that they can control the returns to the Singapore government. So they have not just one objective like us, small-time investor. They carry multiple objectives, and we got to see them in the right light. In that sense, Temasek, being a government-run sovereign wealth fund, has to do a lot of objective, has to perform many national service. National service comes at a price. So I've said before, for example, during COVID, SIA was down to zero revenue because all the planes were grounded. They were making huge losses. All the airlines were in trouble. And who was there to bail them out? Temasek. Temasek was there to bail them out, taking care of them, right? They will take care of national companies like SMRT, Singapore Press Holding, MediaCorp, and I don't know what else, Sentosa, and all this kind of thing. Temasek has to be there to be a pillar of strength for all the Singapore key institutions and companies. For example, Singapore Airlines during COVID was totally flat out. So Temasek was there to bail them out, to take care of them and nurse them all the way until the flights are resumed again. Because of Temasek's rescue, Singapore Airlines is still a great way to fly, and right now they are on record profits, and thanks to Temasek. So there are many, many more of such stories, and we got to understand Temasek in those light. So they carry not just the objective of maximizing profits, but they also carry national service duties as well. So if we deep dive into Temasek, you realize that, hey, 53% of their portfolio are headquartered in Singapore. And this represents a lot of the Singapore well-known blue chip companies. And some of these blue chip company has become blue-black companies, in the sense that they used to be performing very well, no longer so. Example of this will be all the telcos, right? Singapore Telecoms, a key investment of Temasek. Share price used to be some phenomenal high price, and right now, is pretty sad, right? You have also got companies such as Singapore Press Holding right now is basically delisted, and so on, right? Now, of course, there are companies in Temasek portfolio in Singapore that have done still reasonably well. And what are these? For example, we have got Singapore Airlines, a great way to fly. Again, thank God, and then we have got DBS growing from strength to strength. That's also remarkable as well, right? Now, they also have many other portfolios as well spread out across other countries, especially in Asia Pacific, namely China, India. Now, they also have America and Europe, but that's a kind of a smaller portfolio. While they're all spread out, the key strength is still in Singapore. And that comes with a cost of lower returns because Singapore multiples in terms of price earning ratio is very low respect to other countries. Now, some argues that maybe we shouldn't look at headquarter in Singapore, maybe look at the underlying country exposure. For example, CapitaLand, although it's a Singapore company, heavily invested globally, especially in China also. So you look from that perspective, actually the Singapore exposure is only 27%, right? And you have got China, which is 19%, India 7%, Asia Pac 12%, America 22%, and Europe 13%. So if you look at the top three, we have got Singapore ranked number 1, America ranked number 2, China ranked number 3. And these three positions are quite interesting because the Singapore one has been fairly not so exciting, right? Flat growth since 2022, right? It's pretty flat. China, unfortunately, has jibaboom, right? So their portfolio has come down. America has gone up, but unfortunately, their exposure is not strong enough. So let's deep dive a little bit more. Interestingly, a lot of Temasek's assets are not properly valued because they are not listed. Now, listed companies, if you look at them, they have got a price of buy and sell and last done and things like that. Many companies, I would imagine, institution like I don't know, I think Sentosa, for example, is not a listed company. Maybe Mandai Zoo as well. Some of these assets they're probably sitting under Temasek, no list price. So how do you measure the price of this, right? So what they do is that they look at the underlying net book value or book value, and then account for adjustments due to profit and loss and shareholder equity and things like that, right? So that's a very accounting adjustment, and that's how they value it. So I'm sure if this entity will be listed, they're probably going to have higher value as well. So I think we need to understand that more than half their asset are not listed, so they're probably not fairly valued in that sense from a stock market perspective. One of the key reasons why Temasek has not been performing as well as, let's say, S&P 500 is that it has a huge exposure to China. And China, has gone down in the recent 2 years because the property bubble has burst, and there is a lot of trade tension between US and China. And I'm sure the domestic consumption is now going down. There's deflation pressures and things like that. So China actually has done pretty poorly over the last 1 to 2 years. So talking about China, someone might say that, Mr. Loo, why don't Temasek learn from you, right? Just keep far away from China, right? Just invest in US. Yes, China is something that is very risky. I personally find China having a lot of political risk and accounting irregularities as an investor, so I don't touch it. But you need to understand that Temasek exposure to China is different from small-time investor like us, okay? So Temasek has been investing in China for a good, 20 over years. And the last 20 over years, the performance of this portfolio has grown phenomenally, right? Phenomenally. And in that sense, the last 2 to 3 or 3 or 4 years cannot overshadow this huge performance. And they need to carry the Singapore flag right now. We all recognize that China is a huge market. Even Mr. Loo, which staying far away from China, believes that China is a market. If I'm doing business, I must go in. So Temasek do not just look at China as a stock market investment kind of thing. Number one, their time horizon is much longer. Number two, look at more than just stock market investment. They look at business investment. They look at shareholder returns from much more than the stock market performance. And because they carry a national flag, they cannot suka, go in, suka, come out when the times is bad. And if you were to want to stay in China for a long time, you must be willing to sit with them, stay with them in all times, right? If you are a country that claims to be a partner of China, but in good times, you stay there, suck the profits out of them, and bad times, you just pack up and run. How would China look at you, right? If we do pack up and run in this time where the market has some retracement, and when the market start performing well again, then you go back. The Chinese government will ask you to buzz off, man. So we don't have a choice but to continue staying on course and remain in China, because we do believe that one day, even Mr. Loo believed that one day China will recover, just I don't know when. And then when that day do come, Temasek will have a upswing again. So because it carries a different objective than small time investor like us, Temasek has to take the blow of a China retracement right now in anticipation, in preparation that in years to come, it will go up again. Another reason why Temasek underperformed relative to S&P 500 is because Temasek has a much smaller portfolio in tech, where S&P 500 has a huge composition in tech. So for Temasek, from what we can see, roughly 10% is on technology, where S&P 500 is about 30%. 30% is a big number. So right now we are riding an AI boom, right? And therefore the S&P 500 just skyrocket again and again and again, where Temasek does not have such a big portfolio of high tech. So therefore it cannot capture this kind of upswing. Now it's also important for us to look at Temasek and see that Temasek has one thing that S&P 500 don't have, which is a strong merit. Temasek has a lot less volatility. Well, the S&P 500 historically since the year 2000 have several retracements. They are very, very significant. In around year 2000, after dot-com has burst, it went down by 50%. Then a great financial crisis, it went down 50%. In the hit of COVID, it also went down by about 30-40%. And finally, recently in the great inflation, it went down by 40% again. Huge retracement. And imagine our sovereign wealth fund Temasek, have its value dropped by half, right? People go to a Temasek office and throw eggs, right? So they cannot have this kind of performance. So if you look at Temasek, we saw one huge retracement. It was in the great financial crisis where it went down by 30%. Since then, most of the retracement are very small and insignificant relative to S&P 500. So in that sense, you have got small gains, but slow volatility, right? In a sense, S&P 500, you have huge gain, but huge volatility. Not everybody can stomach this kind of volatility that the S&P 500 have. On this note, let me warn everybody again who are fascinated by S&P 500, including myself, there will be huge retracement. We don't know when it will come. Mark my word, it will come. And when it comes, many of you will be crying, why didn't I pull out? Why didn't I invest in things like they're safer, like what Temasek did and things like that. So in good time we celebrate, in bad time we cry murder, right? So on the other hand, Temasek manages this kind of volatility, and as a result, in exchange you have lower returns. Now, if I were to compare Temasek relative to prominent sovereign wealth fund, which is the Norwegian sovereign wealth fund, returned 16% last year in the same period roughly as Temasek. This is an amazing, right? So you can say why Temasek 1.6 and the Norwegian sovereign wealth fund was 16%. This is where you need to look at the previous year from this. Then the previous year, the Norwegian sovereign wealth fund actually has a historically large record loss of $164 billion, which is about 14%. This is a huge drawdown of 14%. That's a very terrible result. In the same period, in 2022 and 2023, Temasek actually lost $7 billion. And this is roughly about 2% or so, where the Norwegian sovereign wealth fund lost 14%. So as you can see right now, Temasek manages volatility. In exchange, when you have low volatility, you cannot have high returns, right? So if you want to be able to accept a low volatility, you must be prepared to accept a low return. That said, if you were to look at the period, I only can spot really one dark spot, which is FTX. Okay, so Temasek invested in FTX and the whole company blew up. They have to write down $377 million. Now, some of y'all may be quick to point fingers and say, well, invest in this kind of thing. Now, I personally wouldn't invest in a space like crypto world and things like that. Now, they didn't invest in crypto coins. They invest in crypto infrastructure. So they try to de-risk themselves by making one step backwards. They invest in crypto exchange and things like that. Now, I personally wouldn't do that, but for Temasek, they have to, in that sense, plant certain bets, make certain bets in certain growing sectors. And FTX was deemed to be one. I think the main problem with FTX is Temasek was being frauded by FTX. Being frauded is something I think they took some responsibility already. The management has some pay cuts and things like that. And it's not very nice to be frauded. If someone is out to fraud you, I'm not too sure whether you can 100% uncover this fraud through due diligence, okay? But I think this is something that is a dark spot. I understand where they're coming from. They have to place certain bets. They have to diversify. But being frauded is not a very nice feeling, right? But this is a lesson learned. I'm sure in future, things will be a lot different. In a nutshell, if we were to look at Temasek, we must take a look at them with a long-term time horizon. We are looking at a 10-year, 20-year time horizon, and their real returns are about 6 to 7%, which is very significant. And it's very important to note that the government needs them to return reasonable return because they have to contribute to the Singapore government's budget. So, therefore, they have to manage their risk so that they will continue to contribute to the government's budget. Therefore, lower volatility in exchange for more conservative return is more important than having high returns with huge volatility, because in that sense, that's something that the country cannot afford. In conclusion, when we look at Temasek, we have to use a different lens. We cannot use small-time investors like Mr. Loo or yourself. And because we can afford to do a lot of things, we just want to invest, make money, minimize volatility, and or minimize losses and run. Temasek is carrying too many flags. They need to make money. They need to contribute money to Singapore government. They need to build relationship with different countries. They need to build relationship with different companies. They need to take care of sustainable living. They need to take care of so many things. I think it's very difficult to invest very well with so many objectives in mind. So therefore, I think we can afford to invest and take certain risks where they can't. The second lens we need to understand Temasek's return is that high returns simply means you have to stomach higher risk. And if you want low risk, it simply must mean that you will have lower returns. So if you want to invest in S&P 500, US index, NASDAQ, tech stock, whatsoever, you must be prepared to take huge volatility, which Temasek cannot afford. Fortunately, when we look at Temasek, we cannot look at it with a short-term lens. You must look at it with a long-term lens. So fortunately, their 20-year rolling average is about 6 to 7%, and that's a very respectable return. I'm not too sure I can achieve 6 to 7% return in my total portfolio. One part of it is of course S&P 500, but also other parts of investment as well, right? 6 to 7% in my total portfolio would be quite decent as well. China is something I won't touch, but I understand why Temasek has to touch and has to remain there for a long time, right? They cannot afford to, in good times stay there and then bad times pull out. One more thing is that, Temasek has to diversify, have to take care of Singapore industries, have to take care of Singapore companies. And diversification simply means that you spread out all your eggs across different baskets. It also simply means that you will limit your gains as well. So in conclusion, when I look at the whole picture of Temasek, I don't like the 1.6%, but I understand why they're there. They have to achieve so many objectives for Singapore. And I hope that one day China will recover, and China is a big market for both Singapore economy and also for Temasek as well. We also hope that Singapore companies can continue to do well so that Temasek will also do well as well. So anyway, what do you think of Temasek's performance? Please share with me what you think of their performance in the comments below. And also, let's discuss this in our Telegram channel. I look forward to talking to you again. We'll see you in 1 or 2 days' time. Thank you and goodbye.